Hello and welcome to another update video about the DXY. I think it's worth doing another update about the DXY. After my last video, the market actually fulfilled this corrective rally. We could say that after the 5-wave move down that I counted with you in the last video, we also had the 3-wave corrective rally in an ABC structure. And it's indeed possible that we now start the next 5-wave move down. Let's talk about that. Okay, so again, I don't want to go through the entire chart again, but the current idea is still in the white scenario that a B wave topped here in October last year at around $107 and just above that, and we could have started the C wave decline. Probably into the low $90 region. That's been my view for a while now. However, this move up into the April highs from the December lows, even though it's a corrective rally, it's a little bit too high for reliable wave 2 of wave C, even though it's valid, okay? So I'm very much on the side of caution. It could very well morph into a larger B wave. That would be my alternative count highlighted in yellow. And this would likely become the primary count if we break above the last highs around $106.50. So in the yellow count, this B wave never topped in October last year. So just wanted to share with you what the alternative count is. We talked about that in previous videos, but just as a reminder. But the primary count is, well, primary until something different is proven, and I'm not very much convinced about it, but it's the one that's currently in control as long as we are holding below the last highs. So the idea is, so again, specifically the $106.50 level. Idea is that we had 5 waves down. There are different ways how this can be counted. That is a bit ambiguous. For example, I'm counting the move down from the April high as a 5-wave move down. It's not a nice looking 5-wave move down. I could count it as 3 waves as ABC, but would then have to count the wave 2 rally completed here at the lower high. Possible truncation, I try to avoid that, even though it's possible. So if we have 5 waves down and here a 3-wave rally, due to the break of the last low, even though it's not yet a sustained break here below the $104 level, first assumption would now be that we are starting the 3rd wave down. So count wave 1 to the downside, wave 2 to the upside, and now 3rd wave down, another 4 and a 5. This is sort of how I see at the moment the microstructure here. If this is really the case and the wave 2 has topped, even though it would mean that the wave 2 here, this corrective rally, it was quite shallow. It was indeed quite shallow, therefore a bit unreliable. The 3rd, and I have to adjust it actually, the 3rd should get to round about $102, can always extend lower. And the 5th wave should get to somewhere around $101, 100, yeah? That would be the count based on that. I think we would then struggle with overall Fibonacci confluence. So something seems off, okay? Because this 3rd should be much longer, mid $90 region or so. So at the moment I can only track this. It might be, I'm not sure. It might extend, or there'll be another wave degree in between. It's a bit too early to say. For now, what am I watching for? So we could say, okay, that this 3rd of a 3rd wave down is unfolding. The condition is now that the 29th of May high is staying intact. That's at $105.20. If we break above it, it's not yet invalidation of the white count, but it might be that the wave 2 is going a little higher in a more extended flat correction. But because of the new low, that's currently not expected. Yeah, that's my update about the DXY at the moment. So I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out these stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.